find your own little things that can make you yourself money and focus in on that. Stick with that. You don't need to be an expert in like crypto and gold and silver and Fibonacci and RSI and all this stuff. All you need to find is a little spot in the finance world where you feel comfortable to specialize and that you can make a little money.
All right, welcome to Looking at the Markets with David Modell. I've got a special guest and a return guest, a repeat guest. Not the first time and hopefully not the last time. It is Mr. David Lincoln. He's a YouTuber like me. He's a finance guy like me. He likes his stocks. He likes his options. He knows a little thing or two about options because he's a former market maker. I can't boast that I've ever been a market maker, but he has. So he's got the inside scoop, and he's a stock twitzer. Is that a word? I just made a word. He's very popular on stocktwits.com, Twitter, and check out his YouTube channel. Either type in David Lincoln or David Lincoln Finance into the YouTube search box, or just click on that link below in the description of this video. Go to check out David Lincoln's videos. Do it. You'll be glad you did it. All right, Mr. David Lincoln, thank you for showing up on my show once again.
Well, thank you for that amazing introduction, David. And yeah, it's been a little time since last time. How long ago was it, would you say, like about maybe 6 months ago that I came on last?
That sounds correct. It's been about 6 months. You got over 1,000 views on that video, which is not bad at all. Usually the 1,000 views club is reserved for people with big followings, and you're getting there. You're making it happen. I understand you have a connection with Guerrilla Trades now. Is that GuerrillaTrades.com?
Yes. There's this guy, Ken Berman, who basically was a great stock picker, I guess in college, and it's one of those stories where he turned, X amount into 200 times X amount. I think it was like 50 grand into like 20 million or something crazy like that. And I actually hooked up with them over a YouTube sponsored type website that connects YouTubers with potential advertising partners.
Okay. Well, that's pretty cool. So check out David Lincoln's channel. Check out GuerrillaTrades.com and tell him David Lincoln sent you. All right. So the big hot topic now, of course, is the marijuana stocks. I've been putting out videos about marijuana stocks. My friend Rich from RichTVLive.com, he's big into those. He's an expert. I used to have Jeffrey Friedland on here. He used to talk very knowledgeably on my channel every week about marijuana stocks. And now, well, before it was Canopy Growth Corp. The pot stocks would all follow Canopy like little puppy dogs. If Canopy it was like Bitcoin, with all the altcoins following Bitcoin, everybody looked to Canopy Growth Corp as the leader. Now they're playing follow the leader with Tilray of all. This is a stock that IPO'd a couple months ago, and now everything is following Tilray. Can you help me to make some sense of this?
Well, I'm not a real knowledgeable guy in the cannabis industry, and when I was trained to trade stocks, I was told, look, it really doesn't matter what the background story necessarily is behind the issue. What matters is the price action and what's going on in the options order flow and whatnot. So I don't know a ton about Tilray. I know that, like you said, it IPO'd, I believe, at like $20, like 2 months, maybe in like July. Blasted up to like about 70, and then last week just accelerated to the stratosphere and got up to 300 and back down. And yeah, like you said, it came out of nowhere and became this huge leader. But I think that happens a lot in new industries. A lot of people have compared it to the .com sort of boom, and it's obviously not as big as the .com boom, but you have all these little mini players, and a lot of it is just the dynamic of a lot of these players being in Canada, where things have been pretty much legalized by now. I believe Justin Trudeau had the whole process has gone through the government, and it's been legalized for late October, recreational use of marijuana. And as many people talk about in the U.S., there's been a lot of resistance from the current administration towards legalization of marijuana. So everything's sort of come sideways into the U.S. market from Canada, and that sort of dynamic has created a lot of just these like no-name players that have had the opportunity to just accelerate to the top, and Tilray just happened to be one of the big ones.
Sure. But what an extraordinary story this is. And you mentioned it kind of, or people are saying it kind of resembles the dot-com bubble, the cryptocurrency thing that happened up until December of 2017. It's starting to kind of look like that, way, way up, and now starting to come back a little bit, although today it went up pretty substantially. And I saw in one of your videos recently that people were giving you flack on stocktwits.com, which is a popular message board for stock traders and options traders. People were giving you flack because you weren't on board with everybody else who's saying, oh, short Tilray. The Tilray is going to go to zero. It's going to crash. And you were actually bucking the trend and going, thinking for yourself, and you were getting some flack for that. Is that true?
Well, certainly, and I never claim to know what's going to happen in an issue. I was trained as a market maker to be delta neutral, which essentially means that you're not taking a position to the upside or the downside in general. But I kind of felt just that this is going to, even if it's a long-term short, which a lot of people seem to say, and every article says you should be short it, which makes me think that maybe you should be long it just for that reason as a contrarian. But we know, even in a situation where something is overvalued and it's going to go down, that it's going to suffer many of these pops, because what happens is all these people short it, and then somebody comes in and accelerates it to the upside, and then all the retail people, the weak hands, they panic and they buy back their shorts, and the thing has these squeezes where it's going to pop up. And we saw that kind of yesterday afternoon into this morning. I know there has to have been retail people that were shorted from like 100 last night, and then after the close it got down to about 95, and then it just ripped on some pretty inconsequential news about them, I guess, giving like a couple doses of medication to some people in Australia. The thing rips up 20%, and that just seems like to be more of a sort of a short squeeze type situation in this. But yeah, just to get back to it, I'm sort of a delta neutral trader, but my idea was that it is going to have some point to bounce, and so I was long in the sense that I sold out of the money puts and put spreads, with the stock around in the 112 range. I was selling the 90 puts and the 85, 75 put spreads a couple weeks out, and just looking for that bounce from somewhere. It'd come from 300. It has to, it's not going to go straight from 300 to zero. It's going to bounce at some point, and that was my play, was to kind of play that bounce.
Yeah. Or at least play the time decay, the theta decay, if it just goes sideways, if it just drifts, if it stabilizes. You don't even need for the stock to go up necessarily. You don't even need a bounce. It won't hurt you. If it does, it'd be nice. And that's the power of selling options, which I've been a fan of for a while now. So speaking of the world of options, what is the play right now? Is there a play right now with a market that just refuses to go down in any meaningful way? Is the economy just so wonderful in the United States that we can expect this throughout the end of the year? Is it safe to sell puts at nosebleed market levels in the equities markets? What do you think?
Well, that's a good question, Dave. And I think that we first of all just have to acknowledge that none of us know what's going to happen. And if you interview someone and they come on and they say this is going to happen, then you immediately have to be a little skeptical of it, because a lesson learned of being a long-term market participant is nobody really knows what's going to happen. But my message remains the same as it has been for about a year now, which is basically like, I'm of the opinion that we're going to slowly move up until further notice, and that's the odds-on play for me. Now, it's certainly not as exciting a message as, oh, I see signs that we're going to crash in a minute or two, but that's just the feeling I have right now, or not feeling, but just my market view right now is that the trend is an uptrend. If we look at a 60-day chart or a 6-month chart or a year chart, you see a big uptrend, and there's no, until that changes, I'm still of the opinion that you don't want to sell puts with abandon, but to say that the market's old or new, there will be no way to tell that until sometime in the future, looking back on this market. So I remain with the quote-unquote boring prediction that we're going to slowly rally like we have been.
Making money in the markets is usually boring. Actually being profitable is not that exciting, regardless of how some people try to sell it. People who do really well usually do it in boring ways. Not always. You get your amazing success stories, but yeah, consistent income should be kind of boring. And when you sell option premium, you're counting on the boring nature of the markets. Markets they drift sideways a lot more often than they go vertically up or down. Would that be accurate?
Yeah, totally. And it's interesting. Have you seen this video? There's a very popular video that was going around for the last couple of years by this guy, Anton Creel, who is a famous Goldman Sachs trader, and he was talking about how like the kind of cowboy days of the 80s and 90s are gone, and now to make money you have to do these like swing positions over several sessions. And I think some of these MJ stocks actually are proving that theory wrong. I mean, it's been extremely exciting trading not just Tilray, but another issue, NBEV, recently, and also just I think that Aurora is going to be listed in the U.S. market shortly. Now its symbol is ACBFF, but they had earnings come out today, last night, and the stock's trading around 10 right now. But I think these players are really exciting, and it's been amazing in Tilray. With the volatility up in the 200s, there's not a lot of liquidity in the options at all, and the markets are super wide, and you can kind of come up with your own ideas, and I've been just having a blast trading that. Like, for example, how do you value a 60 level put a week out in this thing that's trading 112? Well, 2 days out, probably a 60 level put is completely worthless. 3 days out, it's probably completely worthless. So there's this kind of time period in a lot of these options where they go from very valuable to worthless like almost overnight. And so there's really exciting plays out there in Tilray and these other marijuana stocks that I really haven't seen that kind of action since the 90s. And so it's incredibly exciting, regardless of what the industry is, that we have this action going on in the last couple of weeks, and it's been extremely exciting for me.
There used to be no options available on marijuana stocks, and now Canopy has options, Tilray has options, Kronos has options. So it's really opened up quite a bit, and options on marijuana stocks, that's volatility upon volatility. All right, that's leverage upon leverage, really. So it's really something. I imagine those can really move, and you got to be careful. So
definitely.
Small position sizes, right?
Yeah, you definitely want to make sure of to limit your risk. I've basically mostly been doing limited risk spreads, like a call or put verticals. But it's very exciting, like I said. And it's in a sense, sort of a sexy product in that people are into trading it. And the stock market is a real popularity contest and doesn't really have rhyme or reason at times. And Tilray, the valuations have been huge on it. As far as the price the stock's gone to, and people say, well, this shouldn't be, and these numbers and these pages don't do this. But in the end, you have to throw away all those numbers and everything and just trade what's happening in front of you and react to what's happening in front of you. And like I said, the market's a popularity contest. Tesla on paper shouldn't be where it is in stock price. You know, they don't make money. They're burning money, but
Right.
it's popular. It's sexy. Well, marijuana stocks, you know, it's kind of an outlaw, sexy thing, and it's brought in this amount of capital and actually kind of not so smart capital in there. So there's chances to make money. There's a lot of retail people who have no experience with trading this sort of issue that are jumping in with, you know, full force, and that creates opportunity for all of us. So I'm extremely excited about it, and I hope there's more issues like this moving forward.
You're so polite. The not so smart money. Most people would just say the dumb money is coming in, and the Robin Hood traders. Oh no, I'm going to lose some subscribers for that one. No, Robin Hood's great, but yeah, it's true. Would you say that people who would buy an asset, any asset, after a 100% or 200% run up, would you hesitate to call that dumb money? I mean, considering both of us are contrarian in nature, how do you, if a client came to you and said, I'm thinking about taking a position in something that went up that much, what would you say to them?
Well, I mean, when you put it that way, it doesn't sound like a very smart move at all. I know that a lot of these people are just kind of thinking of, well, on this one little burst, I'm just going to jump on board for a little bit of it and get out before the top of the burst. But I can see people getting just killed, and especially the stock NBEV. It traded last week from $1 up to $2, then to $5, then to $10, and it traded a ton of shares, just a ton of shares. And also this other marijuana stock, I think it's CRON, same thing. Traded a ton. I mean, it was like 28 million shares in NBEV, and I know a ton of people bought 6 and sold 4. And what it is the phenomenon of chasing after returns. And what that is like people hear on TV, oh wow, this thing doubled yesterday, and they go, oh wow, I want to double my money, and so they go into it and they follow the returns. It's the same thing as people back when mutual funds were popular, going into your money magazine and you look at which mutual fund made the most returns last year and you put your money in that one. Well, that doesn't really make sense because it's already gone up, and those were the returns from the year before. What you want to do is, which I know the way you trade, Dave, is to find value of things that are depressed, things that are offered, things that nobody wants, and buy those things so that you can get that move, as opposed to chasing after a move that's already happened.
Right, but only in great companies. Assuming we're talking about stocks representing companies here. Only buy something that's depressed if it's a great company, and even then you might not buy it. GE, General Electric, I wouldn't buy it now. I still think it's a good company, but I'm going to wait until the market is done punishing it before I even consider going in if I choose to. Because General Electric could become the next Kmart or Sears for all I know, or Kodak. So, but on the other hand, if a great company, like if a Starbucks goes down for no good reason, let's say Starbucks goes below 50, I'm going to pick some up because it's Starbucks, for goodness sake. That's just one example. Nike today. Nike had good earnings, went down anyway. Want to talk about that for a minute. Is there any reason ever to buy option premium before earnings? And you know what my answer to that is probably going to be by the way I phrased it. But would you ever make an earnings play before earnings?
Well, I mean, a lot of people will do a play like by buying premium about 2 weeks before earnings, and then you hold on to it up until earnings. And if something happens during that period, you get the ride. And a lot of times if you buy premium 2 weeks before earnings, volatility will continue to climb higher. And in a sense, if you buy a call for $2, it might stay at that $2 without decaying for those last 2 weeks. Okay. And so if you get a move before earnings, then you can capitalize on that move and dump it. But to hold it through earnings, a lot of times even the move is not going to be enough to cover that collapse in premium, because we get a collapse in options premium right after earnings, and it's a real crapshoot, and it's a real just a gamble. So can be really dangerous. And if I was going to do anything, I would be short premium through earnings. But once again, that's a risky play. Mm-hmm. It's not a it's not really an intermediate play even. It's a risky play, and you really have to be dialed into your particular issue. Like, for example, Tesla, I would never do it no matter what, because it's a monster that can do anything at any time.
Yeah, absolutely. So, I mean, if that worked, if buying option premium 2 weeks before earnings and then selling it when the volatility component of the option premium is at its peak, right, 5 minutes before the earnings announcement, if that worked, I think everybody would do it. So it's probably not as simple as that. And as soon as everybody does it, it doesn't work anymore. So, I've heard that before. So, and I've heard different time frames. But, 2 weeks, fair enough. But I definitely would not recommend buying option premium, and definitely not a strangle or straddle, because then you're paying twice as much, right before an earnings play. That's going to be very expensive. And then, of course, it becomes like a flat tire, or you're letting the air out of the balloon as soon as the suspense is gone, because when they make the earnings announcement, then it's not exciting anymore. And people are not willing to cough up as much money for those options. Very good point. And want to talk about, since you're one of the renowned experts on this, which is VIX products. Since the reverse split in SVXY, that's become an interesting. I mean, it's so. Is it just me, or is it weird looking at a chart of SVXY and seeing it not at like $13? It feels weird, but I'm getting used to it. All right. Now I mentioned, or you mentioned in a recent video, that you've been staying out of UVXY or favoring, I should say, VXX because of the volume issues. Could you explain that to people?
Yeah, well, the markets are just very wide in UVXY right now, and they don't have a whole lot of rhyme or reason. So you really have to have your pricing in your mind. If you have your pricing down in your mind, and if you have good computer models for options pricing and valuing, then by all means jump in there and don't pay an offer for anything or hit a bid, but put your bids and offers mid-market and get in there, and it has some opportunities, but it's tough. There's a noticeable lack of liquidity right now in UVXY. But as far as the overall short vol trade in general, it is kind of a sleeper trade right now that will make you money. Contango is back, and we've gotten over 5-6% these days, and it's quote unquote a boring trade, but this stuff really is decaying. The short vol trade does work, and it's something that can make you money day in and day out if you're disciplined with it. You wait for a little pop. You can put on either a short call spread or a long put spread in a VXX or UVXY, and it will work for you. We've learned to have limited risk after the Vomageddon. We all have to lick our wounds from that, but it remains a place where there is edge for somebody to get involved and to make consistent money. So, and people aren't really talking about it. And when you hear me talking about trades and things, what I like to tell people is just find a way that you yourself can make money. Maybe it doesn't matter what anybody else is doing. You hear all these ideas on Dave's show and all these different ways different people trade. Find your own little things that can make you yourself money, and focus in on that, stick with that. You don't need to be an expert in like crypto and gold and silver and Fibonacci and RSI and all this stuff. All you need to find is a little spot in the finance world where you feel comfortable to specialize and that you can make a little money, and just dig in on that by yourself. And I'm not going to be able to tell you what that is for you, and neither is David. You're going to have to get out there and just try some stuff very small and figure it out for yourself, because that's the way to be successful as a trader, is to just try some stuff by yourself and kind of specialize in your own little thing. Because following anybody else isn't going to work.
Man, that's really well said. And those types of insights, you're going to see them every day on David Lincoln's channel. So once again, as soon as you're done with this video, click on that link in the description below this video to subscribe to David Lincoln's channel there. Also check out his StockTwits profile, his Twitter profile. Links are going to be there. But most importantly, check out his YouTube, because that's where he really has an opportunity to speak to the audience. I I'm a fan of YouTube and videos in general because I can really speak to people directly, whereas with Twitter and stock twits, you get those 280 characters. It's harder to express myself, but I love them too. I'm cool with all, and Facebook and all that good stuff. Are there any, people always want stock picks. Are there any stocks, either long or short, that you're looking at right now that might be a good play?
Well, I've traditionally been a terrible stock picker, so I might not be the best one to ask on this, but I have been kind of eyeing Facebook a little bit. It has had, tough times with their second trip in front of Congress, and it's in the I believe it's in the mid 160s right now, but it's a component of almost every passive trading strategy and every long strategy, and so all these funds that invest people's paychecks every week have to buy Facebook. And as soon as the negative energy and the push downward is not so strong, it pretty much has to go back up. And I have a friend who I'm still jealous of who bought it for $40. Yeah. He basically put his life savings into it, invested $250,000 at the $40 level, and rode it to here, and he's still long it. And I think it's bound to continue moving higher, but like you've said, this is a long-term game, and you need to, Warren Buffett says, the stock market is the transfer of wealth from the impatient to the patient, and but I go to my business associates, Guerrilla Trades, to get a lot of picks because they're better than me. That's not my forte. I know what I'm good at. I'm good at options valuation, but picking stocks is certainly not my forte, so I'm probably not the best person to ask. What have you heard from other people about that lately, David? I need to pick your mind as far as
sure.
Where's the best place to put $1,000 right now? What would you think?
Yeah, I do like Facebook. I don't necessarily like the company, but I like the stock. JD.com, which is where people in Asia go shopping online a lot of the time. If you're willing to go there. Alibaba. I don't want to be Asia-centric, but those two. China in general, the market's down. You gotta, if U.S. equities are too high, we're not the only nation in the world we can look at. You can buy FXI, which is the China ETF, if you think China's going to go back up after this trade war, after these trade war tensions finally pass. Unless you think the trade war tensions are just going to last forever, but I don't think they will. I think we have world leaders who create conflict and then set themselves up to be the hero by relieving the conflict. It almost happens on a daily basis now. Create tension, release the tension. Hey, I get to be the hero, right? So you can play that. You don't even have to look to U.S. equities. You can. You could just go straight with the spiders, SPY. You could play it that way. But if you want to play other nations, you can look to Brazil. To the EWZ ETF
or BRZU.
BRZU,
I think is the one.
Yep.
Or EEM. EEM is a good one too.
Emerging markets, sure. Mexico, EWW. And so, yes, equities, if you're saying they're a little bit overpriced in the United States, you're making a great point. You're going to have to look elsewhere, and that's okay to do that. So that's what I'm looking at right now. I've got a very short watch list until some of my favorite stocks, like Starbucks, goes down. I'd like to see Home Depot go down. It just doesn't want to. Okay, that's one of my favorites. Things like that. And gold and silver miners, if you have the guts to do it. If not, just get some SLV, the silver ETF, get some IAU, which or GLD. Those are the two most popular gold ETFs. And this is a great time to... The gold to silver ratio is in the 80s. That's insane. So one play right now is long silver, short gold. Just a thought, because the gold to silver ratio is normally around 50. Right now it's above 80, and it's done that 4 times since we went off the gold standard in 1971.
That's very interesting.
Yeah.
I had somebody Yeah, I had somebody ask me a question about SLV actually today and how to play the options, and volatility is very low in there. So in that case, you could buy like a at-the-money call in like January if you want to play that to the long side, and that's a great way to do it on the cheap, so to speak.
Yeah. I don't recommend anybody try to sell options on SLV or anything like that. You're not going to get much. But if you want to buy a debit spread, great. Whether it's a vertical or calendar spread or diagonal or whatever, SLV calls are pretty cheap. If you want to go long silver, short gold, you can just buy some calls or call spreads in SLV. And then buy some puts or put spreads in IAU or GLD. And that way you don't even need silver to go up or precious metals to go up. You just need silver to go up or down less fast compared to gold. So that's one thing that I'm looking at right now. The opportunities are out there. You got to find them. And then Bitcoin, if you have the guts to do it. Some people are waiting for a magic number. I remember an interview in which Tone Vays, the cryptocurrency expert, predicted he said Bitcoin's definitely going below 5,000, maybe down to 1,300. And then he said it's going to go back up by the end of 2019. I believe he said it's going to go back up to all-time highs, 20,000. I don't know. Who knows?
I'm a seller of that one. Yeah, I don't believe in that one, but I'm a seller of that theory. So, like you said, it comes down in the end to our followers. Our followers are what make us, exist actually in this reality, and it's our followers who really allow us access to all these people. And I'm really just grateful for all the, there's a few basic people that just started with me, and it's built from there. And I'm really grateful to all these people who consistently are there every day. And some of you, I know your names, and others I don't even know your names, but I know that you're there every day, and you create us. So thank you so much.
Thank you to everybody out there who subscribes to my channel. Also subscribe to David Lincoln's channel while you're at it. His name's David Lincoln, and he's killing it in the markets right now. He's up over a gazillion %. So there you go. All right. Thanks a lot to everybody for watching this whole presentation. Subscribe to my channel. Subscribe to his channel. Don't hesitate. Subscribe to Aaron T. Scott's channel. Subscribe to Rich TV Live. All that good stuff. I'll put links for everybody because this is our community. We're making it happen. Let me know what you want next on Looking at the Markets. We're going to bring this guy back on here and leave comments on all his videos because he's putting it out there and he's making it happen. He's doing it for you. All right, David Lincoln, thank you so much. I appreciate it. We'll see you next time on Looking at the Markets. Thanks a lot, Dave.
Thank you.